Good evening, everyone. Today we are going to talk about the same currency market. So, especially we have said earlier yesterday that rupee will depreciate further due to the rise of crude oil prices in the broad market, as well as the rising USC treasury yields. As it has been seen that today the rupee has gone up to 74.7980 in the futures market. The depreciation has been going up due to the ongoing strong dollar, as well as foreign investors are moving towards dollar denominated assets due to the ongoing risk happening in the overall market. So it is due to the sentiment, right, that the Federal Reserve is going to raise interest rates further this year. We have mentioned that thing earlier yesterday. So this week we have some one important meeting, FOMC meeting, Federal Reserve meeting in 27th of January. So I think that could be the reason why investors are hesitant to invest in emerging markets like India, China, or Brazil, right, like that. So there are some analysts have quoted some very interesting research for USDNR. The first one is I have seen that that has been given by HDFC Securities. So according to them, the higher crude oil prices and risk of sentiments following a surge in bond yields are enough for the rupee to become the worst performing currency among the Asian currencies. That's what we have said earlier. So this is the common sense. This is the common reason why the rupee has been depreciating. Why we have seen the volatility in the market today when the benchmark indexes are going downwards, especially in the Asian market. You can see there is some reason why the emerging markets are going down, but the uh, developed markets are moving up. It is called decoupling. The money has been pulling out from the emerging markets and it has been invested in the uh, developed markets, as well as we have mentioned earlier that people are moving towards dollar denominated assets. So mainly the US, right? So HDFC is very bearish on Indian rupee due to the rise of oil prices and the surge of bond yields. So the next I have seen that ICICI direct brokerage is also giving their report for USDINR. So they also think that high crude oil prices in the overall market, because oil marketing companies will get a lot of dollars to import oil, which will automatically depress the rupee, which will automatically make rupee under pressure. So I think that could be the reason. So they also quoted that the monetary tightening by the U.S. central bank is also the major reason for the emerging market currencies going downwards. So I have another report that is coming from Motilal Oswal Financial Services. It is the brokerage that we are working with. So we have our best analyst, Mr. Gaurang Somaya. He is one of the fantastic analysts in Forex. So he said that the rupee continued to remain under pressure following losses in domestic equities and strengthen the dollar against its major process. Yes, that's it. And he also mentioned that US Treasury yields have jumped to two-year highs. So that is one of the reason for this. And yesterday, the euro and pound also going down due to the rise of dollar, and the emerging market currencies also going down yesterday. So today we have seen one major important event in UK. The UK CPI inflation data for the month of December has come up. It has shown that inflation has risen to 5.4%. I mean, it has been rising, which makes the UK central bank to rise interest rates further in the future, because it is the UK central bank is the only central bank, Bank of England, that has risen is interest rates to 0.25%. Neither any of the other central banks like European banks or any other banks have not, major banks have not yet risen their interest rates. So it is one of the reason. I think Omicron wave uh, is not at all affecting the market because the last couple of weeks we have seen that equity markets have been going up and up. So the risk factor for has come up due to the fact that the crude oil prices is rising as well as the treasury yields are rising in the US. So it is the market sentiment. And I have another report that is I have opened in the screen from Kotak Securities. Yes. They have quoted also that the 7-year high of oil prices and the US bond yields are going up. It is also 2-year high. So I think these kind of emerging markets assets is going to be in huge sell-off. The analyst is saying like that. So the analyst is expecting the US China to go towards 75 and 75.30 in the short term. I think the stop loss is he's giving at 74.30 for the futures, so it is okay. And the major thing and the last thing we have to mention today in today's market is that we have mentioned some interesting trades today for the clients. We have taken one call option position, and we expect some depreciation for the rupee. But at 2:30 p.m. onwards, the Central Bank of India (RBI) is aggressively intervening in the market. The volume was very high. The rupee appreciated from 74.71 to 74.53. Right now, it is trading around 74.47. So it is a massive intervention by the central bank. I think we think that it could not. We think that the intervention by the RBI, okay, it is the central bank has got lot of forex reserves, right, like that. So it has already intervened in the month of December. Yesterday we have quoted that statement very clear. So uh, the bank of the Central Bank of India, so they are going towards this kind of intervention due to disallow the depreciation that has been going onwards due to uh, why central bank is intervening in the market is because of maintaining the stability in the equity or in the overall forex markets, because when a country, because it also making imports easier but exports tough, right, like that. So the central bank has some agenda, so to maintain the range, the exact range between 74 or 73 something to 76. I think many analysts are saying that the rupee will depreciate from 74.75 or something to 76 in the coming months, especially because the central bank is going to do that intervention. Even though it is going to do that intervention, the depreciation will be going towards the 76 range. So we have to be very careful uh, by analyzing the markets further, because the one-sided move in the markets in the broader indexes has been uh, very good for the past 1 year. But if American Central Bank, Federal Reserve will raise the interest rates further, so I think we will have some kind of selling pressure in the overall market. Especially last year, FI sold more than 60,000 crores of assets from the Indian market. So it is the main reason why rupee depreciated on the month of December, and RBI intervened in the holiday session for the last 10 days of the year. So it appreciated towards that. I think, you know, a major thing is uh, for the future, we believe that rupee will depreciate. The RBI will intervene at the regular intervals. But there are some. It is a forex market is a global market, so the participants are very big. I think it will do something to arrest the depreciation, but at the depreciation will going to happen if oil is going towards 100 a barrel, because the Goldman Sachs bank is believing that oil will go towards $100 a barrel. So these are the reasons we are just seeing right now. So the 27th of January FOMC meeting is the very important meeting. So we have to be very careful with any long positions. So we will come up with another video with a lot of insights. Thank you.